Thank you for visiting the Coin Lady channel again. Having said that, I hope this finds you well wherever you may be in the world. For some years now, we have been witnessing a paradigm shift in the world of international finance. Despite the fact that it has taken a while and that it is annoying to hear about these things happening, nothing substantial has changed. The good news is that in this video, you won't have to fret. To kick things off, I want to say hello and welcome you to my recent essay on X. In it, I'll be covering a lot of terrain to show you that the new system is being implemented and that things are happening behind the scenes. Sorry for the brevity of this message. This, I believe, is the reality that we are witnessing. From what I can see, the cause behind this dates all the way back to 2008. We probably never fully got back on our feet. Which is why the old system needs to be smashed. After blowing up the system, they pretended everything was normal and kept running the monopoly game, in my opinion. It's not only me who thinks this way. Dent Jr., author of a great piece on IDM trading, released this. He goes on to say that this isn't going to completely eradicate the boom of the 1980s. Actually, it's merely about eradicating the 2009 bubble, which wasn't even a time of natural growth, but was instead a man-made phenomenon. Once again, I couldn't agree more. Close inspection of the film reveals a discussion of real estate, which, in my view, covers the whole international monetary system. Well, bubbles only serve one function. In 2000, the Nasdaq fell by 78 points when the first market bubble burst. Stocks in a boom were expected to remain on the market for a while. However, this time my signal foretold an 86-point drop in the S&P 500, bringing it back down to its early 2009 low. Since the early 1980s, there have been stock market booms like this one. The artificial bubble that was constructed in 2009, a year that did not even correspond to a period of natural growth, is being emptied out. There, you could see what he said. It has to fall by the 90s to get back to where it was in 2009. And we probably won't stop there. Actually, that's why this move will utterly ruin the average person, but it will happen in that place. They want this to happen, so it's deliberate. If you want to know when the bubble burst, it was in 2009. Well, would you believe it? An important factor in the bank's success beyond their CPI is the extent to which they are attempting to sway our opinions. They became rich, while the average individual was financially devastated and devastated. Huge shot, exactly how Kavya described it. Insurance for vehicles, 20.3%, transportation, 10.1%, auto maintenance, 7.1%, rent, 6.5%, homeownership, 6.5%, free healthcare, 5.3%, and distance from home, by Victory, are all examples of fundamental necessities where inflation is far greater than the present ACPI of 3.4%. This is the first time since February 2020 when both the core and headline CPI-CBI were hotter than anticipated. It was anticipated that both readings would be lower. Regardless, the markets will insist on believing the Fed story of pivoting. Despite the fact that affordability is still deteriorating. Already, 4 dips have been bought. On the same day that the markets turned red, the yield on 10-year notes did the same. In my opinion, March could be the month when the Fed actually shifts gears. However, extreme caution and vigilance are still required of us. The times we are living in are unusual and fraught with uncertainty. At any given time, anything can happen. Considering all the things that are pressing on us right now, I think it's important that we keep our minds clear. I think a lot of these things, including crypto stocks, are going to have that huge burst in the upside, but after that comes max pain. The new system's rollout will begin after that. By the way, we're already witnessing it in Zero Hedge and all around the globe. Are you kidding me? It's only been 10 days since these posts? That's correct. On January 2nd, we reached 34 billion.00. 3 months later we hit 33 billion.00, or 2 years after we hit 30 trillion and 4 years after we hit 34 trillion. Now, based on what we've seen since around September, we're at an exponential rate, which will reach 34.059 billion.00 by June. Practically this cannot continue. Because of this, your savings are being devoured by central bankers like the Federal Reserve, who are actively attempting to restore 2% inflation. I don't understand why. May we identify those whose intention is to see you lose to the EU so that they may pocket double your investment every year? They're hoarding their funds like they're golden. It feels like we've already reached the point where it will be hard to go back, but it's actually a farce and an unsustainable monopolistic system. But this will be a really tough time, that is the fundamental problem. I really believe that these individuals, and I'm sure you guys may see this as well, are lavishing their money on the most recent and extravagant things. Particularly for individuals who are financially strapped, investing is a must-do even in the absence of any other form of assistance. This is particularly the case when one is looking to diversify their holdings into cryptocurrency items, as well as gold and silver. They're just frivolously spending their money. Those people will be exterminated without a trace. Because something similar to a black swan occurrence occurred in 2008, you should be ready for it. Also, the reason behind the prior enormous bubble popping. I get the impression that we're getting ready for this. A lot of people think things are better now that we've turned things around. And again, do you remember what I said before? When everyone is at their best, getting out is fun, but when everyone is at their worst, getting in is a nightmare. With banks, it works just like this. When the timing isn't right, they'd rather lend to you than go out and get one themselves. Once that day arrives, they will refuse to lend you any money. This is a term I use frequently because of how crucial it is. When that happens, it's crucial to have cash on hand. I mean, it's already rather hefty, isn't it? This, my friends, is the total national debt as a proportion of gross domestic product. We've reached an outrageous 120%. To state the obvious. Because of this, we may confidently declare that a terrifying event is imminent. In order to implement permission-based distributed ledger technology, DLT, that CBDCs, they will need to reset the system. I assure you, I am not lying. This has been going on since the World Bank and other major central bankers came to power. The present financial system is already at its breaking point, and a huge crash is inevitable. When 2023's March and April rolled around, things started breaking again. In the wake of bank failures. If you're wondering who's behind this, it's the Democrats. They're making significant strides in this area while practically printing the fiat system into thin air. After a Republican takes office, everything will be right again. No, we're hurt by both sides, and they're both contributing. I have always maintained that the best individuals become too invested in politics, and that in the end, it benefits neither side. They use this as a weapon to drive a wedge between communities. These politicians have amassed enormous fortunes, despite contributing zero benefits to the general populace. And because they can't read or write, they can't go back to living like us. It is incomprehensible to them. Based on what Wall Street Silver wrote in a recent post, spending by the government is out of control. They are utilizing tricks to make it look like they are cutting costs. In actuality, however, they are charging on at full steam, with yearly deficits above $2 trillion and a predicted rise in national debt to $37 trillion by the end of the year. Each side is playing a role. Instead of putting pressure on Congress to rein in its wasteful spending, Republicans chose to spend an unprecedented $50,000 per household in 2023. While claiming to have made cuts, the leadership is once again putting the problem off. You may recall that Janet Yellen declared her intention to print up to $50 trillion in currency. Since we are now at 34 minutes and 59 seconds, according to her, this will be completed by 2030. There is absolutely no need to be concerned, she continued. They went so far as to question her. In your opinion, is it possible for this to go on? Everything is a hoax, and they know it already. As a result, it feels like they're in a magical land. None of it matters. Additionally, they are already aware that a new system is on the way. Even more bizarre is the fact that the Federal Reserve itself has acknowledged a $114 billion loss for the past year. Just the money lost due to commercial banks being paid to keep it in the Federal Reserve's reverse repo U.S. reserves adds up to that much. Not included in that figure are the unrealized losses on their bond, which could amount to another trillion or more. The Fed will not really declare bankruptcy, of course, on the portfolio. To turn its losses into losses for the taxpayers, it will simply cease paying its profits to the US Treasury. Take a look at this video that was shared by Peter Dent Jr on YouTube. As usual, the Fed wins and you lose. It is important to remember that the Federal Reserve recorded its biggest loss ever, $114 billion, in only 1 year. This would rank as the third worst bankruptcy in US history. View this video to learn who will be responsible for paying the additional trillions in unrealized losses, you and your descendants. The duration is approximately 3.5 minutes. Additionally, this provides comprehensive information regarding the Federal Reserve and the truth behind the situation. Do not be alarmed, the Federal Reserve has just announced its unprecedented biggest loss. The Federal Reserve released the preliminary 2023 financial statements note a few days ago, which you reported. These results do not reflect an audit. When the Federal Reserve says something is wrong, we have to believe them. You might recall that Ron Paul's decades-long effort to have the Federal Reserve audited ultimately failed due to the fact that the Fed is an illegal organization that answers to no one. Murray Rothbard brought up the point that the Fed is even less overseen than the CIA. In any case, the Federal Reserve reported an operational loss of $114 billion this year after grading its own homework. To put that in context, it would be the third worst bankruptcy in American history, after only 2008's Washington Mutual and strangely Life and Brothers. Be that as it may, such losses were limited to that 1 year. Countless other billions remained. The Federal Reserve has lost a considerable amount of money due to printing trillions of dollars to fund COVID lockdowns, and then using those same dollars to purchase bonds, primarily government debt. Part of this loss is attributable to their practice of paying Wall Street to park money at the Fed, which they do to conceal inflation and because they enjoy sending money to Wall Street. And then, when they frantically raised interest rates to curb inflation, prices plummeted, and the Federal Reserve's $9 trillion bond holdings began to lose money at an alarming rate. Unrealized losses, or funds the Fed has lost but hasn't paid back, might be more than $1 trillion, according to estimates. Naturally, the Fed will not reveal those unrealized losses until they sell the bonds, which they do either upon maturity or otherwise. Thus, bond maturities are set in stone, typically at 90 days or 5 years. The Federal Reserve tried to sponge up inflated currency through quantitative tightening, which led to their pawnment. Now, last year's 114 was a little of both, and there's still another trillion or more to go. So, in the short run, it means nothing. Every cent the Federal Reserve loses ends up in the pockets of taxpayers, but when times go tough, it can always print more money, turning it into inflation in the long run. Why? Because the money the Fed was supposed to give the Treasury each year got wiped out by those losses. Fed remittances are what these are called. They are the earnings from the printing and lending of money, which can be seen as a kind of licensing fee for counterfeiting. Now the formerly $80 billion a year in Fed remittances could be submerged for decades. Importantly, up until 2022, the Fed never lost money. Starting now, it will keep losing money until our kids grow up. At this point, it's clear that unchained communication has affected your mood. Consequently, what is to come? You could be asking, well, how does Ripple factor into all this? Also, what is XRP's role? What is XRP's role here? Isn't it rather simple? Just what is fairly crazy? I'm talking about the big dogs here. We're watching some of the largest holders there are. The tiny tier retail magnates who are worth billions of dollars are not the ones we are referring to here. Contrary to popular belief, we are not referring to the average Joe. Rather, we are addressing the wealthy, powerful people like Larry Fink who are responsible for successful organizations like BlackRock. The new system's largest holders are the exceedingly wealthy, according to XRP Daily's posting. Keep an eye on them while they replace the old system with the new one. Look at this. When you're out to steal money from someone, you don't want them to succeed. Thus, you begin by subjecting them to tremendous economic misery. to ensure that the corporatocracy, who created the token and are the principal participants in the inevitable bull market, sees very little involvement from individuals. The world's ultra-wealthy, the trillionaires, will not stoop to the level of 10 million just because the debt markets are collapsing and they are the major holders of the debt they have transferred to the new system. Along with deflating it, they will inflate it. As a result, their riches will grow proportionally, and they will enjoy ultimate power. And the end product will be a larger hollowing out of the center that we will serve to them. Most people will be unable to participate in this crypto bull market since they have not been earning enough money. Increasing interest rates have utterly decimated them, as previously said. For instance, if we take a closer look at recent events, we may observe both new and long-standing key participants in the cryptocurrency field. For what feels like an eternity, Onyx, a proprietary blockchain platform, has been utilized by JP Morgan. Because it serves no purpose, they say, people should avoid cryptocurrency. Since they are already there, it cannot be done. Blockchain as well as distributed ledger technology are not new concepts, to the envy. Christine Lagarde and other central bankers are experts in the industry and keep up with technological changes. Is it really your belief that this is all happening by chance? The old financial system is currently facing tremendous problems, with debt levels reaching unfathomable heights. The pressure cooker is already set, and all we're doing is waiting for the lid to come off. That is precisely what will transpire as a result of this long-term, unsustainable plan to artificially inflate the current system in order to artificially inflate the new system, which will wreak havoc on the old system. The government is inflating a lot of money while printing it. Despite their best efforts to trick you into thinking everything is fine, they are dishonestly providing us with misleading information on CPI and saying that as well. Nobody in retail knows anything about this. As a result of all these widely read news stories, their focus has shifted. Someone needs to be named who will become the next Kardashian. Having said that, I really hope this video was entertaining for everyone. Please show your appreciation by subscribing to alerts and leaving a like if you did. Catch you later, farewell.